You can just check. ठीक है, यहाँ पे भी आ जाना चाहिए. Vishal is joining in. Hey Vishal, what's up? Just give me a minute. Let me finish posting it in different places. And then we are just going to kickstart. Mm-mm-mm. Pa-pa-pa-pa-pa. NL वाला ही है ना? Let me. Yes. Yes. Okay. Mm-mm-mm. Okay. Just a minute. स्लो हो गया है यहाँ पे. क्लोज. सेव. And send. Okay, I think we are good to go. Hey Vishal, what's up? एक minute.
Um, well,
Hi, hi. How's it going?
good. Coming a busy day, 3 hours of calls followed by this interesting call should be fun.
Yeah, it'll be a lot of fun. We've got Kulmani and we've got Saurabh, the usual OG gang. अभी मेरे को बस, yeah, I think we are good to go. Let people join in. But I think we can start from our side. Okay, cool. So I'll just do a screen share and then I think we can start. Akash is also here. Hi Akash, how's it going? Okay, चलो मैं अपने आप को यहाँ से हाइड कर देता हूँ. So I think we are live on YouTube as well. Saloni, just confirm whether you can hear my voice. And I think we are good to go. Okay, cool. So first
I
of
good
all,
to go.
my voice is there,
Yes.
unlike last time. Okay, cool. Okay, so welcome to the ninth edition of the Builders Club Startup News Discussion, our weekly startup live. We are basically going to discuss the startup news of the week. The whole idea of this show is to get the different investors and founders together to come and discuss the different activities which have happened in the startup ecosystem this week. There are some very interesting things which have happened this year, this week. There are some ups and downs, and we're gonna go through that. But before we do that, and I think for the people who are there on YouTube, I'll also let me just share my screen. I hope you guys can see my screen now. I'll just brief a little bit about the Builders Club and then we will kick it off. So just a small, caveat about the Builders Club. We're one of the largest startup founder communities out there. We are technically enablers in your startup journey. Anywhere in whichever phase that you're in, we basically help you in moving on to the next stage. We have a very simple thesis, irrespective of whichever industry or whichever geography you're building in. Um, your issues or your problems are more of of a variable of the phase of your journey rather than your domain. So idea, MVP, early traction or growth, whichever phase that you're in, we believe that you should follow a methodical approach and move from A to B to C to D. And we basically help you progress to the next logical step in your journey. In case you are not a part of the Builders Club, we have nas.io/TBC, which you can see on your screen. Just go to nas.io/TBC and you can register and become a part of the club. Everybody is welcome. We don't discriminate, and we basically get on a consulting call, try and understand where you are, and we can help you in your journey. A few things before we kick it off. So there are two events which are happening, one in Bombay and one in Bangalore. So in Bombay, there's the D2C Insider Summit, which is happening this Saturday on the 20th of January. We are one of the ecosystem partners there. Around, I guess there are a lot of great D2C startups are coming in. So in case you people are have not applied or are do not know that this event is happening, you should go to our social media links. Anywhere on LinkedIn, on Twitter, on Instagram, you'll find the registration form. Just fill it up, put in the referral as the Builders Club, and you should be able to get in. Second is the WeWork Labs Jumpstart. This is one of the largest value-driven startup event which is happening in Bangalore. This is happening both on 20th and 21st of Jan, which is on Saturday and Sunday. So if you guys are there in Bangalore, you should definitely be a part of this. Again, we are also one of the ecosystem partners there. And now I think now that we have got that one through, let's move on to the startup news of the week. We'll kick it off with the funding news. So this week, we have had from around 157.3 million dollars of funding, which has happened in late stage, in growth stage, and early stage startups. In the growth stage, there are nine deals which have happened, and in the early stage, there are 19 deals which have happened. Some notable ones, in the growth stage, there is Impact Analysis, which is in the retail SaaS domain, which picked up $40 million of funding. Then there is Tutsi, Tutsi's parent company, Mako, which is in the dental care. They are a dental care platform. They raised $16 million. There is Varthana, which is a school and student loan solution provider, which picked up $14 million of funding. There is Akshay Kalp Organic, which is a D2C dairy products brand, which picked up $12 million of funding. There is Grip Invest, which is in the fixed income investment ecosystem, which picked up $10 million. Slurp Farm, which is a D2C children focused snacking and meal brand, which picked up $7.2 million. Then there is Fisdom, which is in the wealth tech which is in wealth tech. There is Discovery, which is in insurance. And then there is Yulu, which basically started off as a cycle brand, and now they're in an electric mobility. They basically picked up funding. In the early stage, there is Conway Genius, which is in edtech. There is $7 million. There is Karkhana.io, which is a custom manufacturing platform. They raised 6.3 million. There is PeerSight, surveillance based satellite based surveillance provider. They picked up $6 million. There is Amaha, which is in the mental health space. They picked up 4.4. There is Baker's Dozen, which is a D2C bakery brand. They picked up $4 million. There is Fitter, started off as a Facebook group. Now they are a fitness tech firm. They raised 3.5 million dollars. My Muse, which is in the D2C consumer intimacy startup, you might even find them in Blinkit. They raised $2.7 million. There is Glam Plus, which is a SaaS-enabled B2B beauty marketplace, which raised $2.5 million. Axio Robotics, warehouse robotics startup, they raised 1.8 million. And Emilio, Lemiby, and Biofuel Circle, they raised in undisclosed numbers. Kulmani, Saurabh, any of these interest you or is worth discussing in today's discussion? I believe for me, I think Karkhana.io and PeerSight are a little bit of an interesting one. PeerSight has been in the news news for some time. They have been making waves because I guess they're one of the very first satellite-based startups from India, which have been doing pretty well from our side. And Fitter also, I think Fitter has been a poster child for all of these community based startups, which basically started off as a community and now they have become a full fledged tech startup in the fitness domain. These are a few standout for me from my side. Kulmani, Saurabh, Vishal, Amitoj, anybody of you, any of these which you find interesting or worth talking about, then we'll probably move on to the next section.
Mine is interesting. I've seen a couple of other startups around sexual wellness and over last quarter, I don't remember the name.
Hmm.
I think this trend continues because we generally as a culture also these things we may not be discussing, but we may be ordering a lot of things online.
Yeah, yeah,
So I think this D2C brands in this space, there is space to be built.
yeah,
I
yeah,
think these brands in future will also become large targets for M&A and acquisition, etc., by even bigger brands as they mature.
yeah.
Um,
Fairly niche space to operate in my muse.
hmm,
But the interesting bit is their positioning. They're an intimacy startup, and that's a space which a lot of people usually are not able to go mainstream in that sense. But these people are available everywhere, and they're doing pretty well as well. I think from a communication and positioning standpoint, MyMuse has done a great job. There have been other players also in their space, but they have usually gone the adult communication route. But MyMuse has chosen the intimacy route, which is a very different way um,
right, right.
to look at it. So yeah, yeah.
Second, second, I think this mental health startups which have come up over last, especially post COVID in India. Um, I kind
What's
of
the
have
take
a
in the? It's an interesting one. So please go on. Sorry.
I kind of have a contrarian view on this market as of now.
Always try to
Uh,
website behind the forum. It's one
think
logos
Vishal,
and
your
with
voice is
nothing.
kind of breaking.
Uh, I
I
think
think
video was playing.
yeah, yeah. So this was Vikas. I think some background noise was there.
Yeah.
So I kind of have a contrarian view on the mental health market as of now. I mean, which is not may not be popular, and
Mm,
I feel post COVID the number of reported or people saying that they have a issue has significantly jumped, which may or may not reflect the actual severity of the problem. Right.
mm.
This is what I call the
Can I interrupt? Can I
yeah, yeah, sure.
interrupt you? Contrarian viewpoint. Your position is very well taken, but as someone who has been through a lot after a heart attack and 3 times corona, etc. So it's you are right, but what has changed in the interim is the awareness levels have gone up. That is one. And secondly, mental health has always been a problem area, but it has been under realized is what I would say. A lot of the issues that arise from mental health go on to physiological problems. So it's too early to call. I agree with you that it's very risky, but I'm not ready to write it off. So that's if you don't mind. Having been through the ringer and been there, so I can appreciate that. So let's see. Let's hope for the best. Over to you.
Yeah, yeah, yeah. No, no. So what I was saying, if you let me complete. So I was speaking to a founder in mental health space who happens to be a clinical psychologist with PhD degree from the same university where I went to school. He went, I mean, we were college mates. He was majoring in psychology. I was majoring in mathematics, right? And we were having a frank conversation around. So psychology has two branches, clinical and behavioral, right?
Yeah.
Largely in India, clinical has been the dominant, which is we medicate, we give pills, while in US, this is cognitive behavior therapy. CBT is the popular one where people go and talk about their issues and discuss, right? CBT tells you to take small steps, how you can get out of a situation or a mess you're in or whatever issues you're facing, and tells you to take ownership of greater ownership, etc., etc. Right? So, and it works. It works. And largely, this was always there when we were, and living in larger families, etc. But now what I observe is, even 10th standard kids talking about anxiety. I was talking to my friends' kids, went to their house. And that part I don't understand right now. I don't know how that will pan out because I'm also looking at younger Indians and how are their interactions with these kind of platforms. So from that angle, I don't know how these numbers will play out. So I'm still speaking to founders, trying to understand. Don't have a thesis, but just a high level.
Hmm.
But I'm certainly trying to understand more about how this will pan out in India.
Hmm. I think there have been a lot of startups which have tried in the mental health space. I think globally also there have been a few, uh, but not a lot of startups have actually been able to crack. So I think Better Health is one which grew quite big, and that's probably one of the only ones which is operating in the global space as well on in this domain. But apart from that, there have not been many startups who have been able to crack it properly. I don't know in India. I still believe. Uh, I would not say that there is a stigma attached to it, but I think from an awareness perspective, people would still want a higher touch point, or rather want to have a physical chat with a psychiatrist rather than having a remote or rather a remote assistance in this regard. What is your take, Saurabh, on this?
First, we have been looking at the startups for last 5 years, and we wanted to enter the space. As Vishal said, the problem is real. But I think the problem which the startups are facing is in the digital world, the CAC is so high that they continue to burn, and the lead quality which they get is not too good. So they're not being able to scale rapidly into the space
Mm,
because there are a lot of alternates to, let's say, therapy in terms of, let's say, within the family. Plus, there are physical clinics which are good that way, right? So
mm,
you're bringing convenience to home where you can actually talk anonymously to someone sitting at home and all that. So
mm,
that's growing. But again, the number is not so big currently who are willing to pay where
mm.
the CAC justifies your user base.
Your
And most of these users are not very consistent in counseling. So
hmm.
normally, at least what we have seen in the startups where we have spoken, generally they get about 3 to 4 sessions per user in a year. Now that's
Hmm.
not good enough for any platform to run.
Hmm. Yeah, I think in India, people, at least in the mental health space, I think um, clinical psychologists is, I mean, people usually only only go to only seek assistance when there is a clinical angle to it. Preventive mental health is still something which people would say कि यार मैं तो Wikipedia या YouTube देख करके I'll take a few notes and something, unless and until I need a proper intervention where medicines are involved. That is where I would rather go to a practitioner in that sense. Remote assistance, make clinical assistance, people, I mean, in general, I think look at the telemedicine industry is the same problem which they are also facing now. That I mean, from a consumer behavior standpoint, people tend to trust a physical doctor more rather than speaking to somebody over call. And even if there's a call happens, the second step usually is a physical visit. um, तो मतलब वो वाला इशू, ये कंज्यूमर बिहेवियर वाला प्रॉब्लम है, मेरे को तो ज्यादातर वो लगता है. आई डोंट नो अबाउट द एफिकेसी वेरी फ्रैंकली, कि कितना, मतलब until and unless there are numbers which can be quoted,
Yeah.
fairly difficult to put a tangible value to this kind of a service, मेरे हिसाब से तो.
Mm-hmm.
चलो ठीक है, जल्दी से आगे बढ़ते हैं. Great discussion on the mental health space. Um, so again, moving on to the city-wise number of deals which have happened in the startups. This time around, Bombay and Bangalore have had the highest number of deals. So 9 deals from Bombay, 9 deals from Bangalore, 6 from Delhi NCR, 3 from Pune, very interestingly. And then there is one Ahmedabad, one Surat, one Hyderabad, one Chennai. Kulmani sir, we actually tried to look for data in which we could get the founder spaces, but I think वो बहुत ही इरेगुलर डेटा है, वो हम रेगुलर स्टैंड नहीं बना सकते उसको. कहीं कहीं से हमें डेटा मिल जाएगा, लेकिन हर हफ्ते हम वो डेटा शायद ना दे पाए. सो इसीलिए वी आर स्टिकिंग टू दिस वन. But yeah, I think Bangalore still remains one of the best places to be if you're raising funds, and followed by Delhi NCR and then Bombay, because these three are consistently the places, and I guess these are also the places where the majority of the VC firms and investors also stick around. Okay, moving on to the news. So, सबसे
Maybe
पहले तो
I
ये
had a
है.
question.
Sorry,
Just a
Vishal.
minute.
Yes.
I'm sorry, but I would like to draw the experts, attention to one particular startup I saw. I forgot the name, but it was in the logistics space, warehouse robotics. So
Yes.
that is, I
Heard of
think,
that.
only second deal in India. I do not remember many such deals. I think that's only the second such deal in India. And this I know because I'm working in
Yes.
that space, so that's fascinating. Could somebody give me a perspective on that?
This one, the scalable.
Yeah.
Yeah, yeah, yeah. So I think robotics perspective. I think there has been gray orange. I've forgotten the name of the company. Again, I think robotics is a very interesting space to be in. I think these people are also getting into robotics the way I look at it. And great ecosystem, great industry to be a part of for sure. I will have we at least for me, I'll have to do a little bit more research on how exactly are they operating. But manufacturing to sir in generally garam market hai. Um, a lot of companies have actually done great good work in this space, becoming vendors to all the Amazons and the Flipkarts of the world. And now this company is catering to the Mahindras, PNGs, Bosch, anybody who has a manufacturing plant. But Kulmani, Saurabh, any take on this one?
For me, actually, I was trying to figure out their offerings because I come from a manufacturing background. Like way back in '98, I was working with Tatas.
Hmm.
So I need to study the company because at least on the website, I don't find anything interesting because these kind of solutions have existed for I don't know ages, right? So I need to really see what they're doing different.
Hmm. They are basically moving towards US and Europe. That's what I look at. I think this is the reason why they got funded, because again the margins are higher. There are companies who are already operating in this domain in India, but I think because of probably their focus in the international market, they have been able to attract investors.
The
Uh,
difference probably is that most of these firms currently, when we look at most of the credible firms, they come from Germany, where the cost of labor and cost of resources is high. So this would be a typical case where they are picking up this tech in India and then deploying, so that they would have a large cost arbitrage in Europe and US anyway.
mm, Arkham, Susquehanna Asia. This is an interesting one. I haven't seen this VC investing. I'll have to do a little bit more
This is the
research
first
on
time I heard
this.
about them.
Yeah, yeah, I've also heard the first time I've heard their name. I don't think this is an Indian VC. Yeah.
Most likely Singapore.
हाँ, एशिया एशिया है तो फिर वही होगा. Decide advantage people. Wait, let me just check. Yeah, capital comes venture capital, SIG. This is where is this based out
It's
of?
SIG. SIG is pretty active in India. So
Yeah,
SIG, we have actually two investments in our portfolio companies as well.
yeah,
I never knew their full names.
yeah. Yeah. This is SIG then. Why we invested in in Karkhana.io? Number one, the founder is Sindhi. So,
Mhm.
चलो ठीक है. ओके, मूविंग ऑन. होपफुली विशाल, इसमें थोड़ा सा और डिटेल में हमें स्टडी करना पड़ेगा. दैट्स द टेक अवे ऑन दिस. बट हाँ, इन्होंने कोई एक पोस्ट भी डाला है इसके ऊपर पूरा का पूरा. आई हैव टू प्रोबब्ली गो थ्रू देयर. इस पर नहीं डाला है इन लोगों ने, ज्यादा कुछ बोला नहीं है. Supply chain distinguishes with its focus on high precision manufacturing as opposed to standard manufacturing where raw materials account for 80 to 90% of production cost. High precision demands intensive skill. Acha, so that's their USP. Raw materials account for only 50 to 60%, with the remaining cost attributed to the manufacturing value add. Optimizing production efficiencies can greatly enhance. Okay, so they're basically getting into the higher margin space, high precision. So that might be where these people are getting into. Hmm. Hmm. Great question, Vishal. And I think, हाँ, तो ये वाला है.
I've been noticing all over pulling up. So I've been wondering what will happening. So some customers which I did not expect are going to high-tech systems are actually coming out and inquiring by themselves without even me running a Google Ad campaign. So that has got my attention over the past, and this happened especially since Corona.
Hmm.
I don't know what happened during Corona regarding this, but this is what I have been noting. So, I would Lord, my eyes were drawn to it like a magnet. Thanks, by the way. Maybe you can do a segment of this.
Yeah. No, this is an interesting one, yeah. So basically, what they're saying is customers without Karkhana solution would be at a cost disadvantage when scaling up products from low volumes. As custom production scales, कारखाना can also accommodate this extra. अच्छा ठीक है, तो flexible है इनका पूरा का पूरा. Small volume से लेकर के bigger volumes तक हर एक के लिए इनका their solution kind of fits. And then they're also into high precision. And now they are basically focusing underlines the viability and dominance of the B2B sector, attracting significant investment. Cool. ठीक है. Let's move on to the next one, otherwise, we'll again be running short. So, I think the first news that we want to capture is around the crypto ecosystem. So, India blocks access to overseas crypto exchanges, Binance, KuCoin, and more other after show cause notice. So, the whole, Abhi, I think this. I mean, the reason why we wanted to have this one as the first one is because this kind of instigates a discussion around the whole crypto ecosystem, the long forgotten crypto ecosystem, which was one of the most talked about or one of the hottest ecosystems back in 2021. Now I think the government is also pushing back. Very I mean, earlier this week, Apple also removed offshore crypto exchanges from their app store, and now India is basically blocking this. Um, there are still a lot of startups which are building in the blockchain space in India. There are a lot of communities and a lot of developers in the Web3 ecosystem which are still going for the Web3 ecosystem, saying that there is still a chance that things might actually turn around. What is your take on this, Saurabh, Kulmani, Vishal? In fact, Akash, you are from the finance space also. You have also seen the whole crypto space warming up. What are your guy? What are your take on this? I also have a little bit of thing into it, but what do you guys think?
Maybe if I can go first. Yeah,
Please, Akash.
yeah, sure. Yes. What I feel, I think in terms of acting on it, I think what basically government of India, what they are doing is absolutely right. Because I've seen a lot of guys, especially from tier two, like my friends and and family, I've seen them. They have lost a lot of money in crypto. So one of the biggest problem in crypto is that, I mean, you don't know where to get the information. The good thing about like stock market is that there is specific places where you can get the information about the company, and then you can actually put the money there.
Hmm.
But in crypto, it is quite. I mean, it's there is no information, right? What a certain coin is doing, you don't know. So you have to do a lot of research to really know like what they are doing, and the chances of failure is extremely high. Right, so crypto is basically, so a person who knows about crypto, like for them, uh basically crypto is something where they can easily make their money like three times to five times, right? So I have
Hmm.
started putting money in crypto since like 2017-18. I'm almost basically made my money, I think 12x
Wow.
in the last basically 6 7 years. But I mean, I would 100% say that it's very tough thing, right? You have to have that thing. I mean, the money what I put is something which I lost, which if I if I lose that money, right, I'm actually fine with that as well. So that is the money we should put in crypto. And like if you study, of course, then you can make a better choice. But due to misinformation and basically lack of information, I think it's good what is happening right now.
Hmm. But the overall in the global space also, I think there has been a pushback on the overall ecosystem. All the bigger companies are now gone, especially after the whole FTX debacle, and now in fact even Binance has got a notice from the US government, and they are also facing a complete backlash out there. There are no bigger global, or there are no success stories technically left in the in
Yeah,
the
yeah, yeah.
in the crypto ecosystem.
Yeah, yeah. Again, the thing is, right, there are no rules for these companies, right? They don't have to show some reports after every 3 months, right? So there is
Hmm.
as such no rules. You can say whatever you want, that I'm doing this, I'm doing that, and you don't have to show anything. So that is, I guess, that's the big issue.
Hmm. 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 But then, yeah, I really believe that the crypto ecosystem, I mean, I think I still believe the blockchain technology might be adopted now, but it will not be an industry anymore. I believe as a technology, this will get adopted in the manufacturing space, in the fintech space, in all the different places. But the way we were envisioning cryptocurrencies to be the next thing, that might not be a possibility anymore, and it's completely the fault of the bigger players and how these people have kind of tried to take advantage of other
Yeah, they have
people's
destroyed the
money.
market.
Yeah, they
Yeah,
destroyed the
they've just
market
destroyed the
completely.
market. Yeah, they've destroyed the market completely. Actually, there's
Yeah,
no trust. That's the
yeah,
problem.
yeah. What is your take, Ulmani?
No, I would just like to build on 2 points which you made individually. I think first Akash made a very important point. Uh, so from an investment point of view, sometimes people suspend the belief system about risk return graph. So early stage investing and crypto and assets like these are not for your regular savings. You invest X% of your capital, which is left with you after putting in your regular saving instruments. Right? We are talking about the highest in terms of risk, right?
Mm,
And does not higher risk does not guarantee high return. First of all, people need to understand that, right?
mm,
So first is that. So we should not suspend our belief that this will grow into 5x or 10x if we just put in the money. Second is the important point which Akash made was that we need to understand what protocols are there, what product they are building, what protocols is this protocol going to be successful, right? So you need to have that subject matter expertise also, right? And third point which you made was, I think last uh, podcast you were discussing this book, Short History of Financial Euphoria, right?
yeah.
My elder brother, he did a startup around dot-com crisis. Okay, he was in the US, and I was speaking to him and discussing, how were people looking at in 98, 99, what were people talking about. It's a similar thing, right? There were so many things which came out of that bubble, which were absorbed by the larger tech ecosystem, which became useful later on. So
Mm,
what is the thing which we are getting from this crypto space and which has been the talk of the town is blockchain. Now, blockchain and other associated technologies, infra basically, will revolutionize a lot of things as it is already.
Yeah.
You are correct. The shape will change, but it has revolutionized. For example, think about tokenization in real estate, right? Let's say, right?
Hmm.
Think about if you want to invest in a commercial business district in London or Dubai, you can't because you can't get 1 square foot, right?
Hmm.
But let's say if there is tokenization, then you can get, and then tokenization is basically based on blockchain, which comes from Bitcoin.
Hmm.
All these things are going to change. So both of you made very important point, and which we need to remind ourselves that early stage investing, new asset classes, are not for savings.
Hmm.
I don't know how many of you have looked at TSU stocks lately. All of them are doing wonderful for
Hmm.
last 1 or 2 years, right? BSE
Hmm.
has gone 5x. So public markets, you can't replace these asset classes. Public markets are one thing. Yeah.
Yeah, yeah. People basically looked at the crypto ecosystem to make a quick buck, very frankly. And that's the only reason people actually flocked into it. But as you rightly pointed out, I think the only good thing which has come out of this is the blockchain technology itself. Cryptocurrency, a little bit of a hard sell now. I still have bitcoins. I still hold on to them in the hopes that पता नहीं suddenly एक दिन कुछ ना हो कुछ होगा जो कि होता है in the crypto ecosystem and things might actually turn around.
Yeah,
But
so
if you have
with
them,
Bitcoin,
yeah,
yeah,
go ahead.
so with Bitcoin, just wanted to add one point. I haven't looked at numbers for this quarter. It was supposed to become, in the ideal sense, means for retail transactions, P2P
Yeah,
or P2M, whatever, right?
yeah,
85 and 90% of Bitcoins are owned by institutions,
yeah, yeah.
right? And 90% of individuals who own Bitcoin own less than one Bitcoin.
Hmm. Hmm.
So the
Agreed.
original purpose it has not served, right?
Agreed.
So for example, JP Morgan may be sitting with hundreds of millions of dollars of Bitcoins for different purposes, right? But the original purpose is not being met.
Yeah, 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 yeah. And this is true. I think cryptocurrency, the whole exchanges, it technically became what it was trying to fight against. Very frankly, I mean, all the power which was supposed to be given to the masses, the way things turned out, eventually all the power went to the bigger institutions. And then there was the more power you have, the more bitcoins you could own, and then you can sway the market the way you want it to. And that's basically the very interesting paradox of the crypto ecosystem summed up in a nutshell. Moving on
Just
to yeah, go
just
on.
one point. Yeah.
Yeah, Akash.
So just one point actually. The idea of basically Bitcoin or crypto, right, was that what used to happen that right now if you go to bank, right, most of the bank scams happen because there is someone from inside in the bank, right, who is part of that.
Hmm.
Right, and that leads to the scam in
Hmm.
most cases.
Hmm.
Now, what crypto does is that if you have put some money into crypto or you have taken some money into crypto, the information will be there. So the
Hmm.
chances of scam because of the internal thing, right, that is gone. So that was the like main idea of crypto. I think you both made like right point that most of the crypto is with and Bitcoin is with big institution. That is a problem. But yeah, and yeah, that's all like basically that is of course there. And that is the only reason why the rate of basically Bitcoin is going because these institutions hold them. And yeah, I think and what Kulmani mentioned is basically absolutely right that what is being used right now is the crypto algorithm that is used
Yeah.
a lot. So lately in artificial intelligence also it is used in case of fairness. So what happens is that whatever you do right, it is basically saved in the chain in the blockchain so that like whatever outputs what you are getting it is saved in the chain and someone can't say that I have not basically used the model to do it. So it is actually done a lot lately.
Hmm. 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 Agreed. But that technology will be used by that. So earlier it used to be public, right? Now that technology will definitely be used, but this will be used by financial institutions in their internal processes. There will be no public database now. This will definitely help them strengthen or have the right checks and balances and make. I mean, this is now a tool here. It's as simple as this, like a tool, which will help them in tracking the right things. And as I said, the in the industries, the blockchain adoption is gonna happen. But but it's like in the early days. If you, I don't know how many of you remember this, but even in the internet, early internet days, things used to be fairly open, and then as the scale and the people started joining in the internet, there were regulations, and then currently the homepage of internet is Google. But then there is still 90% of the of of uh, of the internet which is probably not scraped by Google, which we have no idea about. Similar thing is going to happen with crypto as well. I think there will be a lot of these public databases, but there will be no mass adoption. People, the kind of frenzy that we saw in 2021, people trying to make new exchanges, those things are not going to happen. Regulations will be clamped in. There are things which you could do and could not do, or can and cannot do. A lot of, I think, as a technology, this will definitely have a great adoption in the industries, but there will be no public crypto, or public open databases. Rather, technically it was a database, right? It's a database for various different things, right, from content to money to transactions. Now I think everything will be behind a layer, used by different corporations and startups to strengthen their overall processes. Yeah, Kulmani, you had something to say.
Yeah, so I think very important point here to remember is that even in 2024, it's very difficult to move money across countries.
Yeah.
Okay, to
Remittances,
find
great.
remittances,
Yeah.
it's a very difficult thing to do even in today's market.
Yeah.
Let's say if you want to do a transaction from HSBC India to Santander, there will be about 7 to 8 parties involved in this transaction,
Yeah.
right? Either you need to have a contra account in the same currency and then
Yeah.
balance, and that's the reason why central banks will never let something like this, be without borders, etc. And they will
Mm.
come up with their own sovereign crypto, etc.
Yeah, yeah. Digital currencies will definitely exist, but only owned by companies. So India also has a digital currency now. US also has a digital. I think those transactions might happen. Okay, moving on. I think we spent a lot of time on this one. We have a lot more to cover. We'll move a little bit faster. So I think there are rather three news articles. This is again a very interesting point of debate, and I think Saurav has a lot which he can contribute in this one. So down rounds are happening quite a bit, right? So one is, of course, the Udan valuation has been dropped by 50% to $1.8 billion, and then there's the Byju's valuation, which has been dropped by 95% to $1 billion. Um, and I think a lot of these valuation corrections are happening across the board. While this may be, I basically want to understand how does it. I mean, this is again a layman asking this question, and that's why I said probably Saurabh can add a little bit of idea around this. That if I am invested in a company, and my my if I want to make a profit, then technically the valuation should go up. Why would a company who owns a stock in the company want to not want to downsize or course correct the valuation, and technically they are making a loss, right? If they reduce the valuation of a company, I just want to understand how does this work? How does the if the valuation is course corrected, or there is a down valuation by an existing investor, then isn't that a loss to that investor to actually say that, hey, now the company is valued less? Kulmani, you can actually go
Yeah,
as well. Yeah.
yeah. So I think even Saurabh can add a lot to this. We are talking about publicly listed asset managers.
Okay.
BlackRock, Fidelity. These are publicly listed companies.
Okay.
They invest across asset classes, name an asset class, and they are there. ETF, private markets, public listed companies. So they own everything. So first of all, they have to disclose and they have to be transparent more than a private fund because they are a publicly listed asset manager, right?
Mm,
So for them, yes, they will do a markdown on their portfolio, but it's not that obviously this will take a hit on their returns, etc., etc. And we tend to not think about these large asset managers, and we are constantly obsessed with VC fund managers, etc. But at one point, I remember in 2010, BlackRock's portfolio was bigger than Federal Reserve balance sheet. Just
wow.
imagine that. Okay, that's
Mm,
how big this asset manager is.
mm,
So they can move the global markets the way they want to, right?
mm,
So a lot of time you will see these random movements in stock market is because there is some background, some block has been sold, bought, etc. by these large asset managers. So I mean, they have to be transparent, right? They are so big at this point, and I think with Byju's, we all saw it coming. And now I
yeah.
think this 1 billion probably, I don't know, is the only fair valuation of their intellectual property, etc., or the network they have built. There might be something there. Ram, I don't know, maybe Saurabh can tell more. I am a bit surprised because my understanding was they at least the last quarter they were doing well. So maybe Saurabh can add more here.
Something like these are two different kind of news because once you look at Byju's, it's a markdown by a specific asset manager of their personal portfolio.
Mm,
So today, let's say in case I'm holding shares in any illiquid asset, I can mark down my portfolio, but it doesn't impact the valuation of the company in this case, right?
mm,
So Byju's in their right can tell that their valuation is 10 billion or 20 billion. A particular investor marking down doesn't matter in that sense. It just gives a signal because these are large investors who are doing that, right?
mm,
But there's no impact on Byju's valuation because of this in like a real sense. When
mm,
you look at Udan, that's a down round which happened. Now, the reasons for a lot of these down rounds is that when you actually invest in the company at a particular point of time, you are giving them a futuristic value based on certain assumptions and certain numbers they will achieve. Now, if those guys aren't able to achieve certain numbers and they miss it by a large amount, then the next investor who is coming in, they would obviously value the company at a lower valuation. And at that point of time, each of the existing investors, though they do have a anti-dilution rights, but generally those rights are waived off because they want the company to be able to raise money and at least grow versus they needing to write off their assets. So that's like a more like a kind of a call which the investors tend to take to mark down their portfolio as well. Secondly, if the existing investor is investing, they can always do a down round because whatever valuation they gave some time back, now in case that valuation doesn't hold, then even in case they want to probably support the same company, then they need to get it, invest in at the fair valuation
ah,
what they feel is happening at that point of time.
mm,
Now, one of the interesting things which happens in the private market and why it's different from a public market, because in a private market, there are hardly probably 10, 12 investors at that level, right? So once you look at larger guys like SoftBank, Falcon, Tiger, in case they are not investing in the asset, then you would have left with, let's say, certain other guys who are investing. Now, since the pool of investors has gone down, the valuations would not be as competitive as what they were before. And that is the
mm,
second factor why a lot of these valuations or the highly valued companies will come down in valuation because they don't have guys who would be valuing them at that level now.
nee, makes sense. Makes sense. So if there is a next round of funding that will happen, I mean, if the valuation is not right, they'll not be able to find the next investor for that. Makes
In
sense.
this case, the major thing is in case the companies are profitable, then this kind of thing doesn't happen because till the time you're hitting the market for next round of valuation, right? Your valuation doesn't go down, and in case you can survive on your profits, then the markdown hardly happens.
Hmm. Hmm. Makes sense. Makes sense. Okay. Moving on. So again, I think the only saving grace for Byju's is Akash. So Akash is basically, profitable. So they basically had in FY 2022, they made 80 crores of profits, and the sales have crossed 1400 crore. I think they are planning to go in for an IPO, right? If I'm not wrong, Saurabh, they are looking for an IPO. Yeah, yeah.
Yes, but I think they have already pledged those IPO proceedings.
Hmm.
They have borrowed against the future IPO proceedings already.
Acha.
That's what my understanding is. We need to check.
Hmm. Okay. Moving on. This is an interesting one. So Namma Yatri. This is a company which facilitates direct rides between drivers and people who are looking for this thing. So they are they're basically entering Delhi now. This company is developed by uh, by the founders of JustPay, and is backed by Nanda Nilekani's Beacon Foundation as well. They basically are an organization which is unlike Ola and Uber. They are basically trying to facilitate the connects directly. So the commissions which are being charged by by Ola and Uber, which are as high as 30%, is something which goes directly to the driver. They're basically focusing more on the auto right now, but they are already present in 7 cities, including Bangalore, Mysore, Hyderabad, Kolkata. They have basically tied up with ONDC. They are basically launching on ONDC, and they intend to onboard around 50,000 auto drivers in the next 3 months. The reason why I wanted to talk about this news is there has been in the last 1 or 2 years a few innovations or a few USPs or differentiators which people have been trying for in the ride hailing ecosystem. One was the Blue Smart Wave, which basically was in the EV space, which was not technically a differentiator, very frankly. And there has been news about Blue Smart not doing that great. I didn't capture that in the weekly news, but probably I should have now that I think about it. Um, but this one again, there have been a lot of other plug companies which have tried to do this, direct connects between the drivers and people who are looking for this thing. I don't understand how would these people eventually make money on, and even whether this is a feasible business model in the first place. And also, what is your take on the ride hailing ecosystem? Don't you think this is already saturated, with Ola and Uber kind of becoming an oligopolistic ecosystem? I don't know whether there is enough differentiation or enough space for another company to be here. What is your take on this? Any interesting companies which you people think has a long term future in this ecosystem? Vishal, Saurabh, Akash, anybody who has a take on this?
I have a take on this, but it's a purely consumer's take.
Yeah,
After
yeah,
my heart attack, I was forced to be a customer of Ola, Uber, and Rapido and the like.
yeah.
And it is not viable. It is not viable for the consumer because if I am spending 700 rupees a day on my commute alone,
Hmm.
that is a problem. And I can't say that it's an Ola Uber problem. If you calculate just the cost of gas, the cost of petrol to and fro from an office that's 30 kilometers away, it
Hmm.
just doesn't work out. It just doesn't work out. So your take on the business model aspect, I have asked myself the same question. I've discussed with drivers. Most of them in the auto segment
Hmm.
and in the bike segment have other jobs or other careers or other businesses. This is used as a supplement. And
Mm,
I tried the monthly model as well. I tied up with someone who would take me on a monthly basis. 4 to 5 times a month, he would have called me and say, "Sir, aaj nahi ho payega." Why?
mm,
Because he has some other business. That's his
mm,
bread and butter. This is the dessert. This is the ice cream that this finds the ice cream that comes home. Literally speaking. So from
mm,
that perspective, it's a wafer thin market. Uh,
mm.
500 rupees a day, that's 15,000 rupees a month on commute. You're looking at a target audience with a minimum monthly income of 1 lakh.
Yeah.
In India, I believe there are only 3 lakh, 3.5, 4.5 lakh IT returns filed.
Mm,
Oh, okay, I know that is a ridiculously low figure, but that just gives us a ballpark what kind
mm,
of target audience that we are looking at. So maybe Kumani and Saurabh have some other view, but as a consumer who has been forced to be a consumer because of health issues, and I
mm,
mean, nobody in my family would allow me to even look at a vehicle from 10 meters after my attack. That's obvious. so,
mm.
so I don't
Interesting.
know. Maybe Kulmani or Saurabh would be able to add greater value, but as a consumer, it just doesn't work out. The
Mm,
economics doesn't work.
mm, mm, mm. What's your take,
I
Saurabh?
want. Can I?
Yeah,
Yeah,
sure,
please
sure,
go
Akash.
ahead.
Yeah, so my take is not from the consumer perspective, but from the auto perspective, right? So
Okay.
India is a market, right, where India is a market, right, where what everyone wants is that whatever money they are making, right, they just want to maximize that, right? So now the money what auto makes, right, that depends on two things, right? What is the value you are seeing, and what is the percentage which is taken by the partner, right, with which you have rebooked the right. So what has happened is that with this app, right, with ONDC, that percentage is basically very low. So if you basically go for the like players which is there right now, you have to pay something like 20 to 30% to them, right?
Mm,
While what happens is that in ONDC, I think the percentage is very less. I don't exactly know the number, but I think it is close to 10% or something.
mm,
So one thing is that the percentage is less. So what I feel is that if if the app, right, if they can match the pricing model of the existing players, right, then what will happen is that if the auto if they take same ride from like Namma Yatri, the money what they will make would be higher, and that will be the situation when they would want to be there and basically not on this platform. Right? So
mm.
it depends on that. In my
Interesting. Valid point. Saurabh, what's your take?
So for me, I think there is space for multiple players in this industry, though let's say in certain countries you find a couple of dominant players. So Namayatri, for example, could be a good use case where the margins would be low. But I would say that Ola and Uber, whatever we say today, right, they
Mm,
actually rationalize the market because prior to Ola and Uber, it was like I would say a taxi driver's market or
yeah,
a auto driver's market, right? For a couple
yeah,
of kilometers, they were charging you 100, right?
yeah.
With Ola and Uber, what you're getting is a transparency. Whether there's a surge pricing or something, you know exactly how much money you need to pay before you start your ride, and you can take a decision accordingly, right? Second, important aspect is whatever said and done, once you go with a app-based player, you have got a certain sense of comfort that there is a party of the end who would be taking care of your grievances in case something happens. The
Mm,
safety features were pretty much, I would say, introduced by Ola and Uber. Though, like a lot of things are deteriorating, but at least they rationalize the Indian surface transport market for the last mile connectivity per se. So now once you look at a player like Blue Smart coming, right? EV is just a portion of that. The main thing is these guys are giving drivers employment. Who are their employees? So to Vishal's point now, these guys don't need to look for an alternate career because they are getting a monthly salary paid along with incentives, so they can actually focus on running the cabs. And by owning the model, Blue Smart is going middle way where you have got your cabs, so you can control the quality of the cab as well as the drivers. And
mm,
that's why I think Blue Smart actually went up pretty fast. And one thing I like about Blue Smart is they're not growing as fast as other players in the industry.
Hmm.
because to grow in this market, because this is a very operation intensive market, right? So you
Hmm.
need to be able to pace your growth to a level where you can grow comfortably. So
Hmm.
that way, I feel there is a space for a couple of more quality players coming in, because
Hmm.
Ola and Uber initially were great, but now their quality has deteriorated because they have become a kind of a marketplace. Namai, I think one of the problems is it's a marketplace. They don't have
Hmm.
a decided fare, and you need to negotiate your fare with the drivers,
Yeah, it's a
which is
commission
a
driven.
pain which Ola and Uber took. Yeah.
Yeah.
So that's the point. I think I would still continue to use Ola and Uber because I don't want to get into those negotiations, what used to
Hmm.
happen before.
Yeah. 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 Here they are trying to go back to the initial days before the pre-Ola Uber days where the drivers then fix up the rates. Um, but then it's about choosing the lesser evil. The way I look at it, I think both these people are trying to jack up the prices in their own ways. But yeah, I think here at least you have a digital algo which is kind of deciding that.
I think one of the things which we need to remember how things were before Ola and Uber came to India.
Hmm.
So I do remember paying 30 kilometers, 30 rupees per kilometer for mega cab at
Hmm.
9 p.m. And it was,
Meru.
yeah, Meru and Mega. We had several, and Book My Cab or some other players.
Hmm.
There were several players, right? 30 rupees per kilometer, which was, I'm talking about 2011, probably. Yeah, 2011, Q3, Q4, and it was that's the only option we had, right? So
Yeah.
they have changed things. I'm saying truth is somewhere in the middle. Okay, things
Hmm.
are not ideal. The incentives are not as fancy as they used to be when they were trying to bring
Hmm.
more drivers onto their platform.
Hmm.
Uh, but yeah, I mean, plus I think I noticed that Namma is backed by Mr. Nilepani's foundation,
Yeah.
so it may not be for profit. It may be more,
Yeah. Yeah. I think that's the point. I think here they are saying that it's a Delhi government launches the app. But I think it's just the app. It's a part of the ONDC country's first open and community-driven ride booking app. Uh, Convenient and last mile connection. I have to check and see how it has. It's basically making. I don't think you're right. I think it's probably not for profit, and probably that's the reason why it's just an offering in the ONDC network. I think. We'll have to do a little bit more research on this bit and come back. Okay,
yeah.
moving on to the next bit. I think we'll just quickly move past a few of the news which might not need that much discussion. One is Veranda acquires Tapasya Educational Institutions. I basically want to touch upon this because this is again an offline player acquiring an offline player, not that great a news to discuss about. But yeah, I mean, I think a little bit of more consolidation is happening in the edtech space. In the gift city, Indian firms can soon list their stocks directly. This has come from the finance minister themselves. Again, it's a game of taxation. I think this is something which we had discussed the last time around as well. This is one bit which I wanted to touch upon. I think SoftBank is now coming back to India. They had been selling, and I think we discussed this that SoftBank has been selling off their stake in all the Indian entities that were there, and they had kind of paused and had adopted a wait and watch strategy in the Indian ecosystem. But now they have made plans to start actively investing in all the new age companies to strengthen their portfolio in the Indian market. Very interesting data point which I got to know that I think 20% of all Indian unicorns are funded by SoftBank. So quite a Midas touch these people have had. I remember Lee Fixel's days. But I think I don't know how great how good I mean his current firm is doing, but the Tiger Global golden days, that kind of comes back when we hear about this news. This is the last bit which I will probably touch upon, and then probably this might be the last news that we cover before we move on to the book of the week, because I think we've already stretched a little bit beyond. Zest Money finally gets acquired by DMI Group in a distress sale. Um, DMI basically says that they basically now own the exclusive right to use all the Zest brands, and the company's NBFC arm, DMI Finance, will be the preferred lender on the BNPL platform. They would also be able to deploy the Zest Money's checkout platform to its product suite to widen their product offerings. And the Zest Money founders have now launched Zwiffy Labs, which is which is basically a B2B fintech company building infrastructure for banks and financial institutions. Ashish and Lizzie basically have now, and this company has already picked up funding from geo platforms. They've raised around $30 million, I believe. So they've kind of, the news is that these people have kind of moved on to the next venture. um I apart from this, I think, yeah, so this is the last bit which I want to touch upon. Again, distress sales have kind of happened, are happening in the overall ecosystem. Zest Money, if I remember correctly, were also in talks to raise funds, if I remember correctly, right, Kulmani? Uh, and then I think DMI Group decided to just buy them off outright. Um,
Unclear if they, I mean, who were the buyers they were trying to sort of get interested.
yeah, I
But
remember.
BNPL, we do remember discussing it couple of episodes back, where
Yeah,
we all of us agreed that it is also one of the bubbles which was built up.
yeah.
Probably the opportunity size was exaggerated, and then I gave the example of Square acquiring
Yes,
that
yes, 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 yes. I remember. I
company
remember.
for 1 billion in Australia and New Zealand, and ever since then, there has not been a single success story in this space.
Yeah, yeah,
So yeah,
yeah.
something has to either people are not uh, presenting it correctly to the consumers, or consumers. I don't know what is the disconnect here with
Hmm.
BNPL. Need to understand that.
Hmm.
So BNPL as a concept, I think, never worked in the past. You've got cases in Australia and US where it did not work, and I wasn't sure why it's coming to India because a lot of time BNPL is given to a customer as a loan without the knowledge of the customer. And this is a problem because you have taken a loan under the garb of PNPL and you're responsible for it. It's your credit history and all those things.
Yeah.
So BNPL technically sometimes, let's say, once you start crossing the lines, that touch towards unethical or illegal kind of a thing. And this is the problem which is happening in multiple countries. Where customers say that we weren't aware about the charges.
Hmm. But there are companies like Early Salary and all which are doing pretty well in this space. But I think their positioning and their offerings are a little bit different. Checks and balances are probably a little bit different in that space. Akash, you have anything to add on to the BNPL story?
Yeah, see, I think BNPL is good, but I think what actually Saurabh has mentioned was absolutely right. The problem is that this new age startups, right, they don't know the history of the people. So to lend a loan, right, it's extremely important that you have a good score on the customer to basically recover the money. Because as you know, right, if you see Bajaj Finance, which is the biggest NBFC of India, they have made the loan they have made the money by doing by lending the money at the time of pause, right, which is
Mm,
basically point of sale. So most
mm,
NBFCs, so I mean BNPL as a as an answer, it's very important to get the money at the point of sale. So as an idea, it is absolutely good. The problem is the scoring part. That how would you score the customer such that you can recover the money? If you If they crack that, which actually Bajaj Finance had done, that is why they have become like extremely big player in India.
So their the customer segment was right. So they were able to profile the customers in the right manner.
Yes, yes.
Hmm.
So I mean, if you read about Bajaj Finance, right, what they used to do is that how they started is that they actually identified the people who were doctors and engineers, right? So they know that their risk were low, and then they started basically like lending them money at an interest rate which is lower than the banks. So that like what I'm basically talking about is about 2002 2004. So that's how they have created their base, and since the data they have from that time, right, they exactly build the models. Like on this, they have a very shorty. They have a very short, basically good score, a good score which can say that which customer is risky, which customer is not. The problem with the new age startups is that only their scoring is absolutely bad.
Hmm. 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 Hmm.
Yeah, it also comes down to cultural nuances also, right? So X for Y model fails in India a lot of times. I was speaking to a prop tech founder who built a company in US, sold a company in US, where they used to enter a area code and you could get a particular score for a particular house, right? He with an exit came to India and tried to do the same thing in real estate market in Delhi. And you know, we had the circle rate and how much do you pay in cash and how much do you take in white and black. So he quickly realized after spending 2 3 months that this is not how we can replicate everything in India. We have our own nuances. It's very
Got it.
difficult X or Y in India.
Interesting. Interesting. Okay. I think with that we are done with today's news. There's one small news that Amazon is laying off is laying off hundreds of people in their video ecosystem, but that's something you'll probably cover because I really want to move on to today's book of the week. That's the last section. Today's book of the week is a book called The 80-20 Principle. How many of you, Kulmani, Akash, have you read this one? It's one of the really good ones. Of course, people know about the Pareto's principle, but I think this book that you see here is one of the really good books which talks about applications in business of the 80-20 principle. And very weirdly, I think this book has a lot of applications of how you use it in the sales ecosystem, in the marketing ecosystem. Um, and in general in your management principle, the it's written by one of the really good authors in the ecosystem called Richard Koch. If you haven't checked out his books, you should. They explore the idea that a small proportion of efforts or inputs eventually or often lead to a disproportionately large percentage of the results. And I think Saurabh, Kulmani, you guys being investors understand that Pareto principle technically is the foundation, is the founding principle of the investor ecosystem in general, right? So one startup which will make up for all the other ones. So basically the book introduces the Pareto principle, and they basically talk about that. Again, 80-20 is a misnomer. There might be 70-30, 50, 90-10. A lot of these numbers are there, but technically small percentage of work will lead to the majority of the results that you basically get. And the big book basically tell helps you understand how to identify the critical 20% that contributes the most to your desired outcomes and concentrate your efforts on those areas, right? So that involves distinguishing between the vital few and the trivial many. So they give you they give you they help you understand the difference between the trivial and the important bit. So there are a few things that they talk about, and I'll probably quickly run through these. One is basically how to recognize the difference between efficient and being effective. So efficient is doing things right, and being effective means doing the right things. Doing things right and doing the right things are two different things. The 80-20 principle emphasizes the importance of effectiveness, focusing on the activities that bring the most significant results. We are process oriented folks. We tend to, and a lot of people who have been employees, they focus on doing things in the right way. But if you are managers, if you are founders, if you are somebody who's running their own business, it's more important to identify doing the right things. Which are the things that you want to focus your energies on? Because you can do a lot of things, but which are the ones which basically need your attention? Understand that imbalances exist in various aspects of life. For instance, in business, a small percentage of customers often contribute the majority of profits. By identifying and catering to these high value customers, businesses can optimize their performance. In business and economics, the principle is often observed in the distribution of wealth and the concentration of business success among a small number of key factors. And there are charts and there are graphs in the book, and you'll really love this book. And this book is also part of our giveaway today, so in case you people want this book, we are giving out two copies. All you need to do is go to our social media, tag us and tell us what you liked about today's show and what you people learned from today's show, and in case you people have any feedback about this show as well. But I guess with that, we have come to the end of today's show. We will see you guys again next Thursday, same time, same place. um and uh, and yeah, I mean, in case you people haven't subscribed to the YouTube channel, please do so. That actually helps us quite a bit. Saurabh and Kulmani have been and Akash have been our OGs right from day one. This is our ninth episode. Next week we hit our double digits. In case you people like what we do, please subscribe, please like, please tell the people about what we are doing. We have also, from next week onwards, we'll be putting small clips of these news discussions that we are doing on YouTube. So you'll probably see a little bit more of us on your news feed. And with that, we'll take a sign off from you guys. We'll see you guys again.